Hello, hello.
Hey
Awesome.
everyone.
There we go.
Hello.
We have our panel here. So hello, everyone. Thank you so much for joining us for our webinar, The Future of Credit Unions, Accessible Digital Modernization. I'm Miriam. I'm from Equilibrium, and I will be moderating this panel today. We are very excited to have you all. We're going to jump in with these three incredible leaders from digital banking to the fintech space to share some insights with you today. We encourage you to use the Q&A feature and submit some questions. We'll be able to address some of those at the end of the webinar. Today, we're going to be exploring how Canadian credit unions and global credit unions can approach upcoming changes, migrations, and look at it as more than just a tech project. So today, I'm joined by Adrian Moise, CEO and founder of Equilibrium, Ben Goldin, CEO and founder of the digital banking platform Plumery, and Amber Harsin, VP of Credit Unions at core banking system Mambu. Hi all, thank you very much for joining.
Thank you for having us.
So I wanted to note as well, before we get started, that next week we will be at the World Credit Union Conference in Stockholm, Sweden. So if you are going to be attending and you will be there, please stop by the VR Lounge. We will be there alongside Adrian Moise, and Ben will be there in person. And Leon Stevens from Mambu will also be there. So beyond this conversation, if you want to have some conversations, get a little bit deeper, you can meet them in person there. So before we get going, I did want to start with a quick poll. So we have a question here. What is the biggest barrier your credit union faces in delivering modern digital banking? So check out some of the answers here. If none of them really feel like the right answer, you can leave a comment for us as well. We're really curious to know what these answers are, what people are feeling. We're seeing a lot here with outdated legacy systems. We've been hearing that quite a bit. We've been going to a few conferences and hearing very, very similar things. Thank you. I'm going to give it another minute. Okay. Seeing some changes here, limited budget or talent, and finding the right tech partner. Great. Thank you all very much for submitting those questions. I'm going to share these results here so you can see. So we have the most majority here, 44% outdated legacy systems. This is something we're hearing a lot of, and we can shed some light on in this conversation. Finding the right technology partner, limited budget or talent, internal resistance. Not saying anything about member reluctance, so that's really great to hear. So moving forward, we're going to jump right into our conversation. And I want to start with some big picture items first. So Adrian, I'm going to come to you first, and I'm curious to know, what are some of the main challenges that you see for credit unions today in terms of digital transformation? We've been having lots of conversations with people, attending different conferences. I know that you probably have a lot of insight on this one.
Yes. Hi everyone. And delighted to be here with my other colleagues and panelists. We're seeing a number of themes that are recurring, and certain credit unions may see and recognize more than one of these applies to them. So one is about strategic inertia. So credit unions sometimes underestimate the speed at which the member expectations evolve, and the fact that the competition is not just with another credit union or even with the banks. There are the neobanks, there are the Apples, the Shopify of the world, and the other great experiences and apps you have on your phone that set the bar in terms of these frictionless experiences on different channels. The platform lock-in, in which legacy core system or outdated banking, digital banking platform hinder flexibility. And people are starting to doing workarounds, patches, and then building technical depth. A fragmentation in the user journeys, say between the logged in state on web and mobile versus your public website. Remember, those things in channels, they look for a frictionless experience. I love traveling to Europe and then going from one country to another in a beautiful frictionless manner. When you start stopping at the borders, get out of the train, get identified again, that adds friction, and it can be avoided. And the last thing I will add is about the talent and the decision fatigue. So teams can be spread so thin that it's hard for them to juggle all these competing priorities, from evaluating a platform, the vendors, looking at roadmaps, dealing with members' empathy, while also rolling up the sleeve and being hands-on involved in this digital strategy alignment. So they end up with either cutting corners or the projects are taking too long to complete. My takeaway is that transformation is it's not about big budgets. It's about sequencing, having a clear roadmap that ties technology to your business goals, looking at providing real world and differentiated member experiences, and having the right partners for your digital transformation journey.
Thank you for that, Adrian. And you're right. I think a seamless experience is really important when it comes to accelerating speed to market and making sure you don't have a lot of bumps in the road. So coming to you, Amber, where do you see credit unions typically getting stuck when they're trying to modernize their digital services?
Yeah, I think to add to what Adrian was speaking to, he hit on a couple important points there. But what we've observed at Mambu and along my almost 30-year career now in credit unions is that really sometimes we get stuck at the intersection of that ambition and architecture, and we can start to get wrapped around some of the concerns with cost. We can start to get wrapped around concerns with the level of talent with our team and the number of projects that we're taking on, again, to Adrian's point. But credit unions also know that they need to evolve, which is where the ambition layer comes in. Credit unions are uniquely innovative, in my opinion, especially amongst the mid-size and smaller credit unions. They spent a lot of years making things work with limited budgets and small teams, and they get very creative with their workarounds. But that's kind of coming to a head where that's getting a little bit harder to do and still meet the expectation of the consumer. So credit unions really, have known for a long time that they do definitely need to evolve, and we're seeing additional pressures in the market, like, for instance, in Canada, we have the Forge system that's being decommissioned, and that's going to continue to happen with legacy systems that are getting too expensive to maintain, kind of not worth vendors' time anymore, and it's going to continue to add pressure on the credit unions to really move that modernization journey forward. But that can become really difficult when you start to look what the architecture looks like, right? So you have the ambition, that need is there, but how does our architecture or the ecosystems that we have in place help us or hinder us? And in a lot of ways, there's some hindrance, particularly amongst the core systems that exist within at least the North American region. I won't speak for the whole world, but Canada and the US. There's a lot of decade-old core systems that weren't designed for the digital experiences that consumers are expecting right now. So that mix of not having technology that is actually ready for the current demands, the mix of teams that have gotten really creative over the years to do their best to create those bespoke member experiences and staff experiences have kind of created these really fragmented ecosystems where which increases complexity over time. So even when we want to do something that should feel simple, like showing our off-book credit card or mortgage balances in our digital banking channel, those can become a major lift, both for how long it takes to actually get the project done and the cost, both with the vendors that are going to be involved and in lost time to market for the credit unions. So when you really take those things into consideration, that can become quite a sticking point, right? It sounds overwhelming. It feels cumbersome, it feels expensive. But I think in particular, credit unions have really identified that although there's some fear in that transformation, there is some opportunity in that transformation as well. And I think in today's environment, we have some really unique opportunities to remove some of that fear of the transformation and modernization efforts, because the technology has modernized in such a degree that we can incrementally change things and build a stronger foundation that we can then create those member experiences on top of.
Yeah, no, that's really insightful, Amber. And actually, thank you for touching on those smaller and mid-sized credit unions. So that leads perfectly into my question for Ben, which is, what are some common traits of these faster moving credit unions, and can the slower adopters really learn from this and maybe even apply?
Makes sense. Yeah, so I think let me try and connect this a little bit to what Adrian and Amber mentioned before. So first of all, very quickly, I fully agree with Adrian that today consumers don't quite differentiate between different types of financial institutions. All financial institutions eventually became a mobile app or web app on their computer, on their phone. And they essentially, consumers are comparing their experiences of their financial services with any other application they have on their phone, right? So expectations, whether we like it or not, are now completely different. And you can say, yeah, we're a credit union. Because of that, we give a different experience. That's not going to work because, well, consumers, frankly, don't quite care, right? So the competition itself expanded beyond just one particular segment. So that's one aspect I wanted to mention. The other important note that Amber touched upon a little bit is that technology that exists today, and technology that I guess most of the credit unions adopted so far, is built for a one-time modernization efforts, right? So basically, moving from where we are today, from point A to a point B, and then sitting with that point B for a number of years before we realize that we again need to modernize something. Unfortunately, this doesn't work today any longer, because again, for the same reason, a typical consumer compares their financial services application to financials or to application, any other digital application. And these digital first companies, they release improvements hundreds times a day, right? Sometimes even 1,000 times a day. And what enables them to do that is that this architecture that they have is built for continuous evolution, incremental continuous evolution, not just a one-time modernization effort, right? And I think this is a fundamental shift in how we should be thinking about well, digital in general, right? And digital modernization in particular. It's not a sprint, it's a marathon. It's a thing that is ongoing and continuous. Today, we have XYZ expected features, but already in 3-4 months, there will be a completely different set of features. And if we completely froze our project and we don't actually think about it as a continuous effort, will again be outdated very soon. So it's both the mindset question, but also architectural question. Approaches like composable architecture and progressive modernization are specifically designed for incremental evolution on every aspect of the technology, right? Be it a bigger service like a better identity verification, better account opening, orchestration, or something a little bit more minor. I don't know, adding an extra capability in your end-to-end user journey, right? So that's one aspect. Another aspect, what differentiates, well, actually, Mariam, back to your actual question, the other aspect of what actually differentiates slower adopters from a bit more faster adopters is this great balance between what's out of the box, what's technically a commodity, things that are more or less the same across the board, versus things that are required to differentiate, right? And how easy it is really to differentiate in areas that are meaningful, that are customer facing, versus without really touching the commodity part, right? And without replacing the commodity part. This architectural approach itself is what enables both the speed, but also innovation and flexibility where it matters the most, right? So these are kind of key thoughts I wanted to share on that.
No, thank you so much. And, I appreciate the marathon, not a sprint. And, there are lots of different components that need to be considered. And, so in that spirit, I want to shift gears to talk about some of those solutions. So, Amber, we've been talking a lot, in this space about democratizing innovation. And, sometimes that can just be jargon. So can you break it down for us? What does that actually look like in practice?
Yeah, so democratizing innovation is really about making cutting edge capabilities available to every credit union. And you do that by way of the modern platforms. And we do that by picking the right modern platforms that are going to provide you parity when you need it, but are also going to allow you to build for differentiation, which is a little bit of a mind shift sometimes. Ben was pointing out, sort of the old model has been you switch out everything from point A to point B, and you're getting more of that parity approach. But in the more modern composable model and the ability to take that approach across all credit union asset sizes and regions really lets you shift that buying mindset to say, how can I differentiate? What is it that I'm going to be what is it I want to do to differentiate? And make that easiest for us to get in place. So a lot of that's going to really be rooted in, again, those partners that you're choosing, and partners like Plumery and Aequilibrium are really designed to help you get to that point. Is what does it look like to have that composable model put in place? How are you going to differentiate? How are you not going to recreate the wheel when you convert? One of the risks that can come into place when you're talking about modernizing is that you go in with that mindset of just replacing what you have today and somehow thinking that's going to get you a different answer or a different style of getting things done. And in today's world, that's just not going to work. So what you really do need to lean into and focus on in that practice of democratizing that innovation is collaboration amongst credit unions, which we're really good at, thankfully, in credit union land. You also want to lean into making sure you can launch your products in weeks, not years. Lean into offering personalized mobile first experiences that you don't necessarily have to build from scratch. And then lean into integrating the solutions for your digital IDs, things like AI-powered lending and open banking without as much overhead, and then choosing the correct partners to help enable you to do that. Not necessarily partners that are just going to get you the same thing you have today, but who is going to enable you to reach that next level so that you can move into that innovation space.
Yeah, that's a really good point. And, you're highlighting something that I think sometimes some of these smaller credit unions or mid-sized credit unions don't realize, which is the power of choice. You actually can differentiate in the same way as some of these bigger banks. And it really does come down to choosing the right partners because, something that we say at Equilibrium here is like anything is possible. So, the first step is realizing these things and having those conversations. So Adrian, I'm going to bring it back to you for a moment and ask you, how can some of these smaller and mid-sized credit unions realistically compete with the digital experiences that are offered by maybe neobanks or tier one banks or bigger credit unions that they feel like they're in competition with?
Yeah, it's great questions, and we discussed this concept of partnership. I'm going to bring another analogy for the people who know me. They know I'm a car fan, and in particular, I love Formula One. And we had a race in Austria last week, and then we going to Silverstone in England. And I love this because it's the epitome of speed and the perfect balance between strategy, experience, and technology. And bringing this idea about what makes a winning team, and is this partnership, this perfect balance between not just having the fastest car or a great driver or a great hire management or a perfect pit stop, but basically how do you orchestrate and put all these pieces together, right? And then from this, the key to success is this perfect combination between the progressive credit union, the platform providers like we see from Mambu and Plumery, and then a strategic partner like Equilibrium to basically help put all these pieces together in a manner that not only gets the basics right, get out and deliver the first version, the MVP of the platform, but you don't want to be focusing on just an undifferentiated platform, because if you're going out of the box, you're likely to have the same platform as many others. So what is your X factor? How do you really stand out? And then how do you, using the right platform, processes, and tools, pick where do you want to extend, where do you want to create custom user journeys and experiences and flows. So kind of picking your battles. And it's like in the David versus Goliath. It's not just about size, because when you have teams of hundreds, if not thousands of people working on these complex systems, you risk to step on each other's toe. You have too many, cooks in the kitchen. So you need to have the right size, the right partners, everybody align on, a common goal, and using technology to drive these business goals. And we need to remember that transformation is not just about technology, it's actually a lot about the people who are behind this transformation. So you're looking for both this, we have this framework at Equilibrium called the AAA, alignment, autonomy, and accountability. So being aligned on what success looks like, and then building a digital strategy that aligns to the business strategy, and providing the right support and autonomy for the teams to get the work done. But also there is an accountability component. Are we heading in the right directions, and are we moving at the right speed?
Thank you very much, Adrian. Choosing the right partner is very much a multi-pronged approach, the size, the capabilities, what you want, the customization, and it can feel very overwhelming. And I think sometimes we look at what other people are doing, but what works for someone else might not work for me. So taking the time to really break that down, I think, is very important, particularly at a time where, we were talking about the Forge migration. Lots of credit unions are migrating right now, and these conversations are top of mind. So, Ben, coming to you, I'm curious, how can modular composable platforms support progressive change rather than just a one-time transformation? Because really, truly, these things, they happen over time. They can change multiple different times. So, what's your take on this?
Yeah, it's a great question. Again, I will try to connect a little bit to what Adrian said just now. Oftentimes, organizations that are undergoing transformation, they feel like they have a pressure to decide where they want to differentiate now, right? They want to build a perfect solution already today. The concept of MVP for them is a nice, shiny, and brilliant thing. But I think it's very important to pick the technology and define your strategy in such a way that you don't have to decide it today. So basically, you can start small and right size or balance your ambition with what's actually possible, and spread that across multiple steps, right? Basically starting with something that will bring you on par, something that is already much on par with the market, not with what you have today, by the way, right? This is important. So get yourself on par with what's expected on the market, already move the needle fundamentally from where you are today, and then start thinking, okay, what's my next step? Learn from what from this initial step, right? Gather data, understand how your customers engage with your new mobile application or whatever service is being launched. Learn from that and then progress. Now, composable architecture and progressive modernization is exactly built for that, enabling you to right-size your strategy and ambition to your actual business goals. You can start by almost launching white label solution that is pre-integrated, pre-configured, make yourself fast and available. And immediately once this is done, start thinking, okay, how can I actually differentiate myself? How can I become better? And then when the technology allows you doing that in the areas where it matters the most, you don't have your hands tied, right? You don't have to suddenly re-architect everything, replace vendors. that was enabling you really to start thinking about it in a much more incremental way, rather than trying to boil, as we say, trying to boil the ocean in one go, right? And I think this is fundamentally what this composable and progressive modernization approach is bringing, right? Enabling you to do a much more incremental, staged approach without introducing too many risks by trying to do too many things in one go.
I just want to say, building on what Ben was saying, is that caution about what parity means, because if the platform you have right now is already 2 or 3 years back and behind the norm, and then it's going to take you another 2 years to go live, you will be well behind by just trying to get parity. So instead of think about Gretzky, you know, the great hockey player, when he was looking like, you got to skate to where the puck will be, not where the puck is today. So good point, Ben.
Thank you both very much. I wanted to just remind everyone, I've just put it in the chat as well, that our Q&A box is open. So as we're going through and having these questions answered, please feel free to throw in your own and we will address them at the end of the webinar. So now we're going to shift gears a little bit. I think we've nicely transitioned into partnerships. We've touched on it a little bit. I know that I'm not alone when I say that my success is only possible via the team that I work with and that supports me and that I collaborate with. So Adrian, in the spirit of partnerships, how is this partnership with Plumery and Mambu, how does it accelerate time to value for credit unions?
It's a great question. So one is working aligned to their business goals and having these smaller organizations, which also have a cultural alignment in terms of the focus on the member experience, the business agility, not only just running with agile teams. And, you know, looking at this project holistically. So instead of looking at something like Forge sunsetting as a threat, and it's just ripping up one system and then plugging in a new one, it's an actual opportunity to revisit your entire digital strategy. What does digital mean for your organization? And how can you basically look into the entire systems and ecosystem and then figure out if you have the chance to rethink what success is, create a great platform for you to not only make sure that you're resilient given all the bumps that we're seeing right now, but actually enabling you to grow and differentiate. So working with this nimble organizations such as, you know, Mambu and Plumery, we can see this ability to take some of these systems that in the past, I remember deploying a core can be 5 years, and then I saw organization going through 3 CIOs to get the project like that completed. This is a lot of risk, and then because of this, organization are even afraid to change these gigantic monolithic system because it is fragile, and then it touches a lot of elements in your organization. The knowledge about how the system works can be scarce. Instead, the smaller organizations that are using more modern plug-and-play components are able to react much faster. And then the big organization also, it may look like, oh, I have 1,000 developers working on this platform. Yes, but you probably also have 1,000 customers in different geographies. And then how is that product roadmap prioritized to your needs? How about the voice that you have? We see that the right size organizations, we work directly, executive team from our organization, working directly with the executive teams from the credit unions. That's not the case in terms of very large companies. And the other aspect is when the top teams are being deployed, if a project like this requires a team, a squad, let's say 6 to 10 people, while big digital transformation project may require 500 people from this vendor, which one of these projects will be getting executive attention and then the best people for this project? So for us, it's not just business, it's personal. We partner with Mambu. We partner with Plumery. Our executive teams are coming together periodically. We have ability to build, measure, test, learn faster than the competition. And then by having this feedback loop created with the client, we get to basically avoid rework and outrageous delays that are oftentimes associated with these big digital transformation projects.
Thanks so much, Adrian. So Ben and Amber, coming to you, what's different about this model compared to traditional vendor-client relationships in your experience? I'll let whoever wants to go first.
Ben, are you okay if I go?
Sure, please go ahead.
Okay. I love the question because it really gets to the heart of why we've partnered, right? The old model, as Adrian was just alluding to, is that one vendor sells you a platform that's maybe considered end to end, or what we're used to, everything sort of built in, and we spend years as credit union, years and lots of money trying to customize as much of it as we can, using some pieces, not using other pieces, paying for all of it, no matter whether we're using it or not, only to get to the end and discover that our members have moved on. And maybe, but we're not even live yet with some of those offerings, right? And that's a dangerous place for credit unions to be in, and it's a problem we've been trying to solve for a really long time. So what Mambu, Plumery, and Aequilibrium are really wanting to do is bring something fundamentally different that allows credit unions to move faster, also gets rid of that vendor lock-in. That composability allows you to have that freedom of choice. And by creating that composable foundation that's going to bring you open APIs, easy integrations, 6 weeks to bring something live instead of 6 months to bring something live, interoperability, which is really important in a credit union ecosystem right now. We have a lot of breakpoints, we have a lot of manual interjection that we have to do to get processes done because our systems don't talk to each other very well. So having that interoperability is also really, really important. So Mambu, by providing that composable open core with the full API suite, layered with somebody like Plumery, who's going to bring really seamless front-end flexibility and really elegant member experiences to you. And then Aequilibrium comes in and helps with the guiding of the implementation, making sure that you have the success metrics identified, helping kind of speed up that project. What does your UX strategy need to look like, and how do you execute on that with technical precision? Is really ways that we can work together to enable those credit unions to be more than just your guys' vendors or your service providers, but to really become strategic enablers with you, where the credit union can retain control still, but you're going to gain the agility and avoid some of the black box all-in-one vendor lock-in traps that we've been stuck in for such a long time.
Yeah, I'd like to add on top of that. So in addition to what Amber just mentioned, I think the SaaS approach itself, that is fundamental to our operations, also changes the dynamics a lot, right? So traditional software vendors, they naturally were geared much more towards larger financial institutions, be it a larger credit union or a larger bank, because that's the only way they were able to make money, right? Their model overall, how they build software, how they customize it for each individual customer, is really geared towards that. And that also means that a smaller financial institutions naturally just cannot afford and cannot get a technology that is modern. Why we talk about democratization, right? What does that word means? Why we brought it up is specifically to emphasize that a combination of these three organizations are working on the solution that can serve and can be affordable and actually accessible to any size of the financial institution, from a small credit union, small financial institution, to a very large credit union or very large financial institution, thanks to an actual SaaS native architecture, right? And SaaS first approach that combines and actually kind of builds flexibility only way it matters. But for the rest, there's a full model of economic scalability, right? Economies of scale applies to pretty much every other aspect that doesn't require flexibility, doesn't require differentiation. So I think it's important to emphasize that. I think we don't talk enough about it, but that's what fundamentally changes the dynamics and enables that democratization.
Thanks so much. And I appreciate all these insights. I know for Equilibrium, we know where we thrive and we know what we're really good at, but we don't try to be something that we're not. So by partnering with other titans of the industry, like Mambu, like Plumery, that goes into elevating the holistic experience for credit unions. So just knowing that, you come together to build this team to help service each of these credit unions' unique needs, I think it adds a personalization that, helps move things forward in a very seamless way. So I want to zoom in for just a moment on the Forge migration. We've talked a lot about how this isn't just a platform switch. There's really an opportunity to modernize your digital presence. So Adrian, coming to you first, and Amber, I have the same question for you, is, what makes this migration such a critical pivot point for credit unions?
Indeed, I know Center One struggled, and they tried multiple approaches to building this Forge digital banking platform that addresses the needs of hundreds of credit unions. And the results were not what they were expecting. When Center One announced, I don't know, October, November, that Forge would be sunset, it caught many credit unions by surprise. So whatever they were planning to do for this year, then dealing with this change that was basically thrown to them became top of mind. So almost like in martial arts, right? How do you take kind of the opponent's energy and then redirect it in your benefit? Use this as a digital transformation trigger, and then use this as an opportunity to revisit your holistic digital strategy, not just replacing one system with another. And for the record, Forge is not just a digital banking platform that provides the experience for members logged in on web and mobile. It's also a public website. It provides solutions for marketing and marketing automations and promotions and so on. So it involves systems such as the content management system, data and analytics. And we discussed the importance of ensuring a consistent experience between the logged in and the logged out or the public website version of your online presence. So how do you use this opportunity to ensure not only your resilience, but also growing members, right? And then since Forge, which you already have right now, is a few years old, the longer you stay on this platform, that is clear there will be no more investment, no more updates, no more user flows, no more features, then you risk to lose more and more of your members. So your CMO and your business leader will look into the efforts they're doing to basically attract the members that will be offset by the churn and the loss of existing members who are gonna migrate to organizations who will switch to these newer, more performant digital channels sooner. One aspect to keep in mind is, the Gen Z experience. And then we saw some of the stats in here. Credit unions are addressing typically an older audience, which is great. At the same time, we need to look into the potential that the Gen Z is bringing for these long-term relationships. So how do you look after and maintain the members who brought you here, but also embrace the new generation, the Gen Z? And part of that is to recognize that the way they look at digital, these digital natives users, they have different expectations. They will not call your credit union. They will expect to treat them like you know them. They are comfortable sharing their data if they are convinced that you will be respectful with that, and then that you'll provide personalized services for them. So this is not a lift and shift situation. You cannot just copy and paste your all flows. We are talking to some credit unions and said, we used to do things this way, but was that the right way? You know, if you now have a chance to change, why change to the old way, especially since the platform that you have, that's not how they work, right? So this will be custom built for you to tailor this experience. So how do you strike the right balance between getting the maximum value from what's out of the box? This is like an all-inclusive resort, right? You go there, you get a great deal if you stay within the resort. But if when you start going horseback riding, you want to go scuba diving, then that becomes a quite expensive trip. So it is important to figure out which battles do you want to pick, because these customizations not only increase the cost, but then they can create problems with the cost of ownership, because if you go too custom, then as new releases are being deployed, we work with credit union that takes 6 months to deploy a new release and so on. That's a lot of effort, in which at the end you basically have no new features or capabilities for your members. It's just you just upgraded to the latest version of the platform that was just made available to you. So there is a price to pay when you go custom. So you got to be, again, partnering, looking into the right platforms that can be extended, and then, you know, with the right strategy between what's out of the box versus what needs to be tailored. And then is that where your differentiation would be, right? So similar to credit union, going back to the metaphor with cars, if you go into a parking lot and you strip the badges, you see a lot of similarity between these cars, and the list of features that they have printed on the windshield, it's quite similar. However, you know, car manufacturers who are successful have chosen a theme that makes them to stand out. Honda may say, we are the most reliable. You know, Volvo would be like, we are the safest car. BMW would say, we provide the best experience for the driver. If you just want to go to groceries or have a lot of space in the trunk for kids or the dog and so on, then that's probably the Porsche or the BMW. It's not the solution for you. So what is the right solution for you? And then is the solution that you have right now, will that enable you to remain relevant and successful 5-10 years from now?
Thank you, Adrian. Amber, how about you?
Yeah, to add to what Adrian was speaking about there, is Forge's decommissioning is more than an online banking migration, right? Although it feels like you've got to rush through that because it came quickly and there's not a lot of time to make that change. It's really kind of a once in a decade reset moment for credit unions. But there's new tools available to us that have put us in a better position than we would have been a decade ago if this same announcement had been made. And that is that we don't have to do a complete lift and shift of our entire ecosystem anymore to modernize. We can take tool sets like Mambu, Plumery, and Equilibrium and go through a very risk controlled and staged incremental modernization, but at a quicker, that sounds slow, and I don't want it to sound slow because you get to move really quickly. Maybe you're just going to move your youth accounts to begin with because you want to create a bespoke experience for those members ages 16 to 25 that are in a point in their life where they're getting ready to buy their first car or go off to university. And are going to need different things from you, maybe different saving strategies that you want to be able to leverage AI to give them advice or make recommendations for where they might be able to work within their budgets versus what you might want to do if you're moving those members who are ages, 52 to 65 and entering more of that retirement phase. Being able to go through that modernization journey incrementally, but quickly is going to become a differentiator for credit unions to really thrive into the future state. And I think we found ourselves at the nexus of all of those things coming in at the same time for us and becoming affordable and available to credit unions of all sizes today. So while Forge was a really scary announcement, it's one of the best opportunities that I think have come up to help credit unions really step back and assess their entire strategy.
Very well said. And Ben, I do have a question for you, but just because we are on the topic of Gen Z and, this Amber's talking about incremental modernization, and Adrian had touched on, how do we maintain these loyal members while looking at this new generation that's becoming financially independent. So, we wanted to ask, and we have a poll here that, ask, what is your biggest concern when it comes to attracting and retaining Gen Z members? Because, they are coming on and having very vastly different needs than some of those older generations. And, we're very curious to know from the people on the call, what are some of those challenges that you're facing the most of? And, where can we come in to help support you? So I'll let this poll go for a little bit here while we get some of these answers coming in. So it looks so far that people do understand what they are expecting, but let's see here. I'm gonna 3, 2, 1. Okay, so in terms of the results here, it's mostly that the tech stack can't keep up, or the culture or brand feels outdated. There's also a not sure how to personalize for them in there as well. So interesting takeaways there. I do have some questions about that as well, but I do want to first come back to Ben about the Forge migration in particular, because, from a digital banking platform perspective, I'm curious, what are some common pitfalls that you're seeing, and, how do we help clients avoid them?
Yeah, so probably I'll go back to what I mentioned before, right? I believe the way Forge was built, it was built as a one-time effort, right? Basically, big bank approach, building something that looked all right probably at the start of the project, was slightly outdated at the end of the project. And then it was maintained as a typical software, custom-built software, right? Incrementally adding, fixing things, but also in a very minor way, right? It's not the same type of incremental we were talking before. Meaning like, oh, something is broken, let's fix it, right? There's a new compliance regulation, let's update it. Pretty much like any typical traditional organization works. Today's world expects completely different pace, completely different agility, expects continuous evolution. And that's the biggest pitfall to avoid, making sure that whatever is built today, it's built for the future. It's not built just to kind of get ourselves on par with what we were, where we were yesterday. And well, basically, probably quoting one famous person, it's important to start with why, right? Whatever is being done. Like if we want to implement certain thing just because it was there before, that's not the right why. Right. And if we ask that why, we probably will figure out that, oh, actually, we don't need that. Right. And the only reason we are doing that is because it's so comfortable to just take whatever exists and just replicate it. But by doing so, we are just building a new legacy. Right. The legacy of yesterday will become our legacy of tomorrow. And we don't achieve anything. It looks slightly better, possibly runs on microservices, maybe, versus what it was running on before. But it's just the same level of legacy that already needs replacement next day it's launched. And that's a huge pitfall to avoid. Also, again, connecting to what I mentioned about SaaS and also what Adrian mentioned before, what SaaS enables us to do is to continuously upgrade the software to the most recent version. So there's no situation where because of a lot of customizations, you suddenly get to a point where you cannot move forward, right? And technology hinders your innovation, hinders your improvements. So SaaS naturally prevents you from getting there, because SaaS doesn't allow you to customize heavily. It only allows you to customize where where it matters the most, right? Where it's actually important, or actually configure the things that are different potentially organization to organization. But it naturally guardrails you from accidentally customizing too much, or accidentally customizing things that shouldn't be customized. And by that, just basically locking you into a particular snapshot of a platform, right? Particular version of it of today, which will be outdated in 3 days, right? You can ask Amber how fast Mambu releases changes, right? I still remember that as well. We follow similar principles. Like software requires continuous, well, let's say maintenance, right? Because it's not only innovation. Certain things are required to be fixed just because of regulation, because of bugs that are found in the system for other reasons. But it's a continuous process. Software needs changes every day, and if the version that you have created is bespoke and customized for you, well, that means that there has to be a dedicated number of people who would also support it for you, right? And that goes back to my original point about price and accessibility for smaller financial institutions. The moment a vendor requires to maintain a dedicated team of people to support you, that very moment the price becomes huge and unaffordable, right? And these are all the things SaaS versus traditional to me, right? Because SaaS naturally, maybe not by intention, but just naturally protects organizations from all these pitfalls.
Yeah, Ben, just wanted to kind of plus on what you said. I had opportunity to migrate from Europe to Canada, from Canada to US. I work for Microsoft in Seattle, back to Vancouver, then to Europe in Amsterdam, back to Canada. And between some of these trips, I haven't even unpacked all the boxes. So to your point, why carry all this luggage with you just because you have those boxes? If you probably haven't opened that box in 2 or 3 years, it's probably you don't need it. So why don't you think about maybe it's a good idea to donate that and then figure out who may need them? What is the new you? And then what do you need in terms of your new lifestyle, the new digs, the new geography that you are in? So very good point in terms of don't just basically, copy and paste, or basically say, we used to do that, or we used to have this. It's a great opportunity, like Amber was also saying, rethink your full digital strategy with this Forge migration.
Thank you all very much. I think some really great points here about modernization and how it's happening at such a rapid pace. I think we're living in a time right now where things are moving faster than they ever have, and they will only continue to grow in that way. So it is great to collaborate with folks who are just as innovative, just as open to modernizing and working towards the future and not sort of staying with the status quo. Before we close out, we do have some questions that have been submitted that I do want to ask our panel, starting with some questions about Gen Z. So someone's asking, where we see the biggest disconnect between what Gen Z expects and what credit unions are delivering today. So I'll just put that out to the group.
I can answer that. This is definitely rooted in the US credit unions that I have worked in for a long time, but I think it applies in Canada as well. And it ties back to the interoperability, right? So Gen Z and Gen Alpha, even, I happen to have one of each, expect that you have access to so much data about their financial behaviors and patterns and where they spend their money, where they get their money. They really don't understand why we can't always show them like the full picture of their financial space, and why we can't more quickly respond to risks that we're maybe seeing in their behavior, or opportunities that we see in their behavior to help them set themselves up for better financial success. For a lot of credit unions, we still rely really heavily on coming in and talking to someone in branch about how to build a budget, or how to maybe log in and watch a 20-minute class on our website. And that's not really what they want to do. Like, they like having that option be available, but what they really would expect is some sort of message to pop up and be like, hey, we notice you have $100 left over after you pay all your bills. Why don't you put that into a savings account? Or do you know about high yield savings accounts? They're really expecting that, both interoperability, meaning talking to all the different data sources that we're collecting from them or about their financial life. They don't understand the complexities behind the scenes. But open banking is going to open that data up to us too. And then how to make that actionable. And right now, unfortunately, in the credit union movement, we're still behind on that front, and anchoring in our service being superior. And it is superior, but we also need to make that superior service automated.
It's a really good point. I feel like credit unions are very good at zeroing in on what their members' needs are. And so I think it's really important to understand that where member needs in the past might have been associated with, making good environmental impact or community, maybe now they've evolved into a lot more of these digital desires that a new generation is bringing forward. So thank you for that insight. I have another question here that says there are a lot of credit unions that need to migrate right now, as we're seeing with the Forge platform. And so the question is, what is your approach to handling so many that need to move? I think this is a great question.
I'm going to take a first stab of this, because when we helped Center One build Forge, and then we had 300 credit unions who were lining up to get migrated to Forge. It also reminds me of that Seinfeld episode, right? When he reserves the cars and goes to the counter to basically get his car, and guess what? There is no car available for him. How many of us haven't seen the situation in which you put your credit card down, you believe that you will get a car when you get at the airport, in this new destination, only to figure out there is no such car for you. So it's a great question, because we talked to dozens of credit unions in the last months alone, and then we are discussing, they would like to start the process of building and deploying the new digital banking platform in Q1 2026. They have yet to select the vendor and go through the process of a POC or have a proper process to basically align the choosing this new vendors. And again, it's not just the digital banking platform, it's also the CMS, the analytics, potentially marketing automation. And still they want to get in, starting Q1. And these vendors, how many credit unions can they service into that one quarter? 1, 2, 3. So then when will be the next wave that, can be served next? So a few things, how we approach this effectively. One is by looking at some tiers and coming up with one solution, having one pioneer, one champion. For example, when we deploy Forge, we had credit unions like First West and First Ontario and Alterna, who basically were the champions. They proved the models, and then, then there was a solution that after that was done, at scale. And with these tiers, again, it was a matter of differentiated who are the credit unions who can tailor the experiences. They want more from what's out of the box. And these are the most sought after credit unions, because most vendors want to work with them because they have bigger budgets, they have more prestige. There is a risk, obviously, for the smaller credit unions that there is less interest in working with them. And I think Ben and Amber can comment on how they are addressing the needs for these smaller credit unions through potential partnerships. We saw this type of associations or communities like Leak Data when they deploy Mambu, for groups of 40 credit unions. And I'll pass that to Amber.
Yeah, I think that the model is very similar. Let me back that up a little bit. So Adrian mentioned Leak Data, which is a cooperative in the Atlantic region in Canada, who's converted 37 credit unions to a completely new tech stack that happens to be powered by the Mambu core in this case, in 15 months. So when you talk about that scale effort, they really had to go through an exercise on how to do that. And some of that was identifying where there are the similarities, and you can maybe convert in cohorts to begin with, right? And then you can customize later if you need to do a full lift and shift. In this particular case, League Data did full lift and shift conversions of the entire tech stack. And Forge was likely to be similar from that digital banking side, just due to some time constraints. But when you talk about maybe modernizing or moving to a more composable or modern ecosystem across the board, you do have that power to also incrementally move. So you don't have to necessarily lift and shift everything too. So I think there's a little bit of a difference there. That's not common for us to be able to do that in the credit union space. We're used to everything all at once. And in this case, you can start with maybe the digital banking and then move into other services as you go.
Thank you so much. I hate to cut off the conversation here, but we are at time. I have captured the questions that have come through that we might not have had a chance to address on the call, but we will be putting out a wrap-up email, a wrap-up blog where we will address those questions. I will direct them at the panelists that are best suited to answer them. I really just want to thank everyone so much for coming and participating. Thank you to our panelists. As a reminder, we will be at the World Credit Union Conference in Stockholm next week, so come meet our team. You'll see Ben there as well, and we have Leon Stevens from Mambu who will be attending, so please come to the official VR booth. We're going to have a lot of fun there. Thank you again very much, and feel free to reach out to us, connect with us on LinkedIn. We'd love to continue the conversation. Thanks, everyone.
Thank you so much.
Everyone.
Thanks for joining us today. Bye, everyone.
Bye-bye.